Rohr here with an early concise highlight on Wednesday, June 17th, 2015. It's currently 7:30 a.m. U.S. Central Time, and this is going to be concise indeed because we'll only be covering the S&P 500 future, as so much else remains much the same as discussed in the video and actually updated on Thursday morning, and actually updated market observations from this morning because we wanted to see if any of the nominal data in front of the U.S. Federal Reserve FOMC announcement today had any real impact. And so far, it really has not. Most of the markets are steady-ish and within the parameters discussed yesterday. So, what has all this meant to the markets? Well, as usual, we're starting with the hourly chart of the S&P 500 on the left, the 30-minute on the right, and it was quite a nice recovery out of Monday's sharply lower activity. This is September contract. We have to still allow through Thursday's June contract expiration that this is trading at an $8 discount to the lead contract. And after Thursday, this becomes the lead contract. And we will compare that to the continuation levels on the weekly chart and the like. But this market, the bears had a chance to put it down below the 2067 area once again, as they did going back to last week, Tuesday. And what's so important about 2067? Well, add that $8 back, and it's the more important 2075 to 78 area, the low end of that range on the lead contract. And we said yesterday it then would be very important whether this got back above the 2080 to 82 area, aside from the fact this drop below 2080 area was an attempt to re-accelerate. This was some downside acceleration coming in last week Monday, but the market couldn't maintain it after it got out into the gap higher opening Wednesday, so it was trying to re-accelerate below 2080. Now what's important about 2080 to 82? Again, add that $8 discount and you're up to 2088 to 90 on the lead contract, another important level. We'll be looking at all that momentarily on the intermediate term charts. And that spills right over into where the market is trading this morning. It's up here, up a couple bucks at 2091. Now, if you add the $8, that means it's trading at the equivalent of 2099 lead contract, which gets it back up into the 2096 to 2100. It was a very important level because only once it broke that last week did it start to really show that it could sustain any more downside activity. And even though both the September contract and the June contract were above it last week, pardon me, last week on Wednesday into Thursday, by Friday the market was back under pressure. So it's still a very important level on the lead contract up here at 2100, and we'll be looking at that momentarily. As far as the indicators right now, whether the market can sustain further strength will be more important on the 30-minute chart initially, because any significant further strength will put the 30-minute MACD back out above its upper runaway band. But we have a feeling with this thing getting closer to expiration will be really important is whether the SEP contract in its own right can get back above that low 2100 area it peaked out at last week. And that pretty much does it for the short-term view of the S&P 500.